Welcome to Straight Talk. Many experts say New Zealand's escaped the worst of the global economic crisis thanks to our reliance on agriculture as an export earner. The dairy industry has gone from strength to strength when it comes to overseas earnings, but returns are still buffeted by the volatility of the New Zealand dollar. But now there's the strong suggestion that the recovery may be longer coming than first thought. Political parties are toying with the idea of compulsory saving. What benefit might this have for investment in agriculture? And when is the rural real estate market going to stage its much vaunted revival? Today I'm joined by Federated Farmers Finance and Economics spokesman Phil York and National Business Review editor Nevil Gibson. Well, Nevil, the recovery, is it a recovery?
Oh, it's certainly a recovery, but it's going to take a lot longer than we think. But you've got to remember that we are enjoying very high commodity prices. Some of them have come off, but not just in dairy, but also forestry, even aluminium. In fact, very few of them are going backwards. So we're still on an export boom, and I think that will last because the Chinese economy, while it looks like it's topping off, is still driving quite along. And strong demand in Europe and some of our other markets.
So what recent events have there been to make commentators suggest that the recovery is perhaps going to be a flattening out rather than a straight upward surge? Well,
a lot of them are looking at the financial markets, and you've got to remember the Northern Hemisphere is going through the summer, and the turnover on Wall Street, for example, is at really quite a low. So I think that volatility is driven by the fact there's not a lot of people in the market at the moment. And with Wall Street going up and down, it looks like one day they're saying that there's a double dip recession and further bad news, and then the next day there's some good news. And so it's quite hard to interpret the markets at the moment. But overall, I think things are going to take a little bit longer to recover than we would have expected earlier this year.
Yeah, do you agree with that, Phil?
Well, I think the high prices for the dairy industry 2 or 3 seasons ago really fed into the economy and helped prevent the start of the recession. I still think personally, I think there's still a recession to come. I think the unemployment figure showed that the other day. And as they always say that if agriculture in New Zealand's booming, then the whole country is booming. Well, at the moment, a lot of people out there, particularly in the sheep and beef industry, are feeling pretty rotten about the fact that they're getting high prices overseas, but it's not actually going into their pocket.
Right. So what could happen in New Zealand that would mean that agriculture would be able to contribute more to the recovery?
Well, one could say that a 20% devaluation tomorrow would be certainly something to think about, but it's certainly not Federated Farmers' policy. But government are just going to have to learn to live within their means. They're just borrowing too much money, and in effect they're bringing in an overseas currency that's been our job in the past, but instead of earning it, they're borrowing it. So in effect that makes a huge difference to the exchange rate. Now the exchange rate needs to come down over all our trading partners as such, but
yeah, what do you think, Nevil?
Well, I don't think
you can't do much about the exchange rate, can you?
No, I don't think it'll come down. It's been down as low as 68 and as high as 72, which is a pretty sort of standard, really, because we're, along with Australia and Canada, which we're considered a commodity economy, and our currency reflects that. The US dollar is quite volatile, and we've seen the yen strengthen a lot, Japanese trying to pull that one down. The Swiss franc is hugely strong. Again, the government there looks at intervening, but we haven't seen a lot of intervention. And on the local scene, though, we've had strong retail sales. We've got GST coming up. That's going to cause quite a lot of shoppers to get out early before the price of refrigerators and some of those sort of durables.
But how late are they going to leave it? It's October the 1st. You would have expected a burst of spending before now, wouldn't you?
Yeah, well, you can hardly open a newspaper these days without seeing huge amounts of advertising from all of these big stores. Plus, we've had the entry from Australia of a couple more in the appliance and hi-fi sectors, and they're very, very competitive. And the 2 grocery chains, of course, their prices are actually going down. Right.
Phil, do you think farmers will be out spending before GST goes up? No.
I don't particularly think so. But to go back to the currency again, I think at this stage in the cycle we should be certainly probably. Well, MAF themselves came out with the figures last year, and we should be around. They budgeted on the whole of last year on 49 US cents. Well,
that's a huge difference, isn't
it? That is what they predicted last year, and that came from Treasury. So in effect, the fact I go back to the fact that the government is borrowing so much money that it's skewing the scrum at the moment, as far as we can see.
What do you think, Neville?
Well, the Reserve Bank, I think, made a misstep a few weeks ago when it raised interest rates, and there's not a lot of pressure for that to happen again. Australia
It just acted too rapidly.
Yeah, and that's really the key to what Phil's talking about.
Yeah, and Federated Farmers came out prior to the OCR changes and said that it wasn't required. In fact, a lot of the time they've been talking about housing is the major reason why interest rates need to go up, because of the price of houses rising. Well, they're static or even falling. So in effect, to actually to raise the OCR at that particular time was you know, we're in a different world. It's not what happened several years ago is or what's happened in the past is not necessarily relevant at the moment.
No.
Yeah, I can't see interest rates coming down, but they're not going to go up. But again, that'll be driven by offshore factors, because in America they're holding interest rates down at near zero. Same in Europe. So there's not a lot of pressure coming from that quarter either.
And if interest rates do go up, we have the effect of foreign currency coming into New Zealand to take advantage of it, and then the dollar lifts again.
Yeah, the carry trade hasn't gone away, and especially with the Japanese yen where it is. And again, no interest rates there, and don't look like being brought in Japan. You know, the carry trade where people can borrow cheap in Japan, invest in Australia and New Zealand. Yeah.
What about Phil's concern about the unemployment statistics? That certainly gave some economists a bit of a jolt, didn't it?
It did, and it probably proved that the previous figure was a little bit optimistic. So these figures are being very closely watched, and no one's really quite sure what's going to happen. The other thing, of course, is in the middle of winter, we tend to be pretty down-looking, and you know, there's not a lot of...
There isn't the seasonal work available or that type of thing.
Yeah, and it's quite traditional this time of year, but by spring things could change around.
Right, OK. And the government and other political parties looking at the idea of compulsory saving. Do you think this might be a much-needed boost to the economy, Phil, or how do you see it?
Well, when you start saving, you actually take money out of the economy, don't you? Initially, sort of, and then somebody who's taken that money from you or whatever has got to redirect it back into the areas where they perceive that the market is working best. Well. I'm not quite sure about it. I just...
you think people would be better off making their own individual investment decisions?
Well, I think a lot of farmers are fairly individual, although they get together with for the dairy company as a co-op, for example. But in effect, I think that I like to think that people looked after their own. From my own point of view, I like to look after their own sort of future. But saving money is not necessarily just for your old age. It's you save money for the years when your business is struggling and you need to actually put capital back into it. So it's not necessarily just about saving for your old age. But as far as the majority of people in New Zealand are concerned, but businesses are probably a little bit different. Yeah.
Would it get us away from the bogey of overseas investment that we seem to have at the moment, Neville? If there was more money available from local sources with perhaps a compulsory savings scheme, we wouldn't have the concerns about the Chinese coming in and buying up dairy farms.
Yeah, I don't think the compulsory saving is really the answer. Of course, Australia has it and it makes it look impressive, but in fact our savings rates are quite high, and people go through, as Phil says, through various stages in their life, and I don't think a compulsory scheme's the answer to it at all. In fact, it would really only just draw away savings that already exist. And it's New Zealand's got a lot of self-employed and farmers, and it's no good to them. But what we could do is make KiwiSaver, spread it a bit wider, without necessarily the incentives, but sell it as a very good idea, and that people should be looking after themselves, and that's the ideal vehicle.
What do you think about that, Phil? Has that got merit?
Well, I think it's a good idea that you've got a savings that you've saved that you can actually use belong to you. I mean, the idea of just throwing the money into the kitty and then when you die it's all gone. Or at least there's one thing about when you do have this sort of KiwiSaver, that money actually belongs to you and it can be passed on to your family. And
there's a choice about the investment options as well, which appeals to different investors.
I thought there was an interesting point Neville made, though, about the fact that, say, in my own situation in life, where if I've got to go into a compulsory savings, I would actually probably be taking money from other savings that I've got to go into this particular savings rather than generally from income, you know. So
that could be a negative.
It could be a negative, yeah. I think there's probably might be a few people like that. I don't know.
Yeah.
There's a lot of pressure from vested interest, really, the banks and investment industry to get more savings. But of course, a lot of people lost billions of dollars during the finance company collapses, and it's really...
And they're not about to get back in again.
Well, that was effectively savings, but it didn't do anybody any good.
No.
You talk about sort of the lack of capital in New Zealand. I think that particularly the farms that we're talking about that the Chinese might be interested in, I think that if these were hugely profitable businesses, and we're talking about $6.10 at the moment this year, but if you inflation adjusted, you go back to 1972 when we're getting $13.50. And in effect...
That's a big difference in dairy payout.
The problem is that it's the profitability of these farms that if... and Nevil was just telling me before, there is money out there, but this money is not going into these farms because they don't perceive that the return in there is sufficient. So in effect, we could have a local capital base, but it's a straightforward case of that these businesses need to be more profitable.
We'll keep a close eye on that. Thanks, gentlemen. Coming up after the break, we talk about some public views on the economy. Stay with us. Welcome back to Straight Talk. Now it's on to You Said It, comment in the ag media, which we want to talk about further. Now, Phil, there was a letter recently in the Herald on Sunday. New Zealander living in China saying he was putting off coming back here because of our spending culture. He said it'd be the ruination of us. What's your view?
Well, I think that unless he was coming back to New Zealand to get involved in a productive job, then he may as well stay in China and send the money home to whoever he can.
But people take a lot of notice of these types of views, don't they, in terms of that person perhaps having been trained, educated in New Zealand, taking his expertise overseas, now not wanting to come back because he sees a fundamental flaw in the economy. Well,
I've got a son who's a geologist and he works in a gold mine in Kalgoorlie in Western Australia, and he'd love to come home, and we've got huge amounts of gold in New Zealand, and we should be actually encouraging people to come back and do something that is productive, that's actually creating something, and as such, well, if the person you were talking about in China wants to come back and no offence, working as a bureaucrat in the council, well, we've got plenty of people around that can do that at the moment anyway.
Right. OK, what do you think, Neville? I know mining resources is an issue close to your heart. You'd like to see Phil's son back here.
Yeah, I think it's unfortunate, but we can only offer a certain number of jobs, and you know, there's 1 million odd New Zealanders live outside the country. You've got to remember our population is still well under 5 million, which in Chinese terms is a medium city, and therefore the